Well, hello everyone, and welcome to the Future of FinTech, our second D'Amore-McKim School of Business COVID-19 Resilience Talk. I'm Emory Trahan, the Senior Associate Dean of Faculty and Research and a Professor of Finance in the D'Amore-McKim School of Business. And I'm very pleased to kick off this afternoon's talk. First, a little bit about this event and the Resilience Talk series. In an effort to bring our community together during this uncertain time, we're hosting virtual events with faculty experts and alumni thought leaders around specific COVID-19 crisis-related topics. We hope to bring value to you, our community, by providing access to a forum where we can all share ideas and learn about the experiences of others. And we want to provide an opportunity to continue your lifelong learning. These sessions are not simply prepackaged offerings, but rather a platform for unscripted and interactive conversations by D'Amore-McKim for the D'Amore-McKim community. I'd like to now introduce the moderator for today's event, Professor Mark Bernfeld. Professor Bernfeld is an experienced entrepreneur and angel investor with a commitment to environmentally and socially responsible businesses. He is a professor of practice in the finance group in D'Amore-McKim and a visiting scholar at Dartmouth College. He's also a leader of the FinTech Initiative at Northeastern, which officially kicked off early in 2019 and has built a community that drives education, advancement, and engagement in FinTech across the university. Mark has really been a key driver of our efforts in FinTech, and the work that he's done has been and continues to do with our students, and the rapid progress that they have made over the past year is impressive. I'd be remiss if I didn't also mention that Mark won a Professor of the Year award last year, a well-deserved recognition of the work that he has done in guiding our students and advancing the FinTech Initiative mission at Northeastern. I'm very much looking forward to this session, and I'm pleased to welcome your moderator for today's event, Mark Bernfeld.
Thanks very much, Emory. Really appreciate you joining us and providing leadership at this time. So. Welcome everyone. We have close to 70 people on this session right now. I'm really excited about it. I do want to say that you've heard a little bit about me. I've been at Northeastern about 5 years and I love it. And there's really two reasons for that. One is our students are amazing. There are probably about a dozen of my former students on this call. Hi folks, I'm not going to name you right now. Great to see you. Great to see your names out there. Our students are amazing. The other thing is we have incredible vision at this university for what we need to do, and we empower our people to do it. So in just a year to a year and a half, we've created a real community around FinTech, which has been really exciting to me. I'll tell you a little bit more about that as we get into our session today, but I'm going to start with just a few housekeeping things. Your microphones should be muted. If they are not, please make sure they do that. If you want to speak up, you'll have that chance. We would love if you want to turn your videos on. And this time we need to see one another. So it's certainly up to you, but we'd love to see you if you want to turn your video on. And then third, my current and former student, Salim, has joined us with the nice red chairs in the background. He's actually in Bahrain right now, but he will be helping me moderate the session. If you have questions you'd like to submit, please do that via chat and Salim will help. We probably won't get to them all, but please do that via chat and he'll try to help me get through those. So with that, I did talk about community. And one of the things that's been really exciting to me is how we've grown our community here. Two of those people who have fairly recently joined our community are going to be our great speakers today, Deniz Johnson and Rafael Febres Cordero. So I would like the two of you to introduce yourselves, and while doing so, talking a little bit about FinTech, how you got into FinTech and why it's important. Let's start with Deniz.
Hi, thank you, Mark. Many thanks to the Northeastern community to put this panel together, this talk together. I'm a new community member. I will be teaching the FinTech and Financial Innovation class this fall, and I'm looking forward to it. My background is I started in healthcare and then moved into financial services and financial technology specifically for the last 20 some years. I'm a startup board member and advisor, and I work specifically on emerging technology adoption. And my passion project is inclusive financial services recovery and transparency in AI. I have why FinTech, how long I have been involved in FinTech, and what I'm doing in FinTech, and briefly, is financial technology is in the core of financial services. In some cases, our ability to provide the service part of finance comes with limitations on our technology. So it's incredibly important to be involved and to take that to the next step. So that's been kind of the driving force for me. And pretty much after the 2008 financial crisis, about a few years into after that, I started getting involved in FinTech, the upcoming FinTech at the time. For the last 5 years, I've been very heavily involved and exclusively in the last 3 years. I'm specifically, I'm an advocate for FinTech Sandbox, a core organizer of the Boston FinTech community. I'm a mentor and judge with Mass Challenge FinTech. And I'm very happy to be here because I believe that FinTech is what's going to get us through this as we start the recovery process.
Thanks, Deniz. I am so excited to have you on faculty with us and teaching our students starting very soon. So welcome. Rafael, it's been great to get to know you. Please introduce yourself.
Thank you so much, Mark. And thank you for everyone to be available for today's call. It's quite humbling to participate in these very unprecedented times. I'll briefly introduce myself, but before that, I have to all tell you, I'm quite pleased that Emery is actually doing the introduction for this call. He was one of my favorite professors when I was a student at Northeastern. And I was pleasantly surprised when I learned that he was being part of this call. So I'm happy to reconnect with him. I had the great opportunity of being at Northeastern. I actually did a major in finance at the time. It was a dual major of finance and insurance, and I also did another major in international business, given my interest in international business in general. Had the opportunity of having great professors as Emery himself, but it was really based on those professors who really planted the seeds for curiosity around innovation. I didn't call it innovation at the time, but it was basically innovating finance. The job of the moment when I was going to school, it was really joining the investment banking industry, which I ended up doing, and I ended up becoming a partner to a family-owned investment boutique that some relatives of mine founded back in the day. And I was involved in the advisory piece of the work. This will all make sense when I'll mention a little bit of what I have been doing lately. But the innovation piece actually stayed with me for the rest of my career. And so from investment banking and the opportunities that I had, exposure that I had when I was going at Northeastern, was really cemented when I landed two internship opportunities. One was with what is now an asset management company owned by BNY Mellon that is called the Boston Company. Very focused on very specific strategies. Even though I was not part of the investment process during my internship, I was actually dealing with the board of trustees. It really gave me a terrific opportunity to really see how things were putting together and what sort of fiduciary responsibility the asset manager has to have before their clients. The opportunity that I had to work for Bain and Company started as a 3-month co-op, and it really translated into a 9-month co-op program, totally designed organically by mutual interest. And a year before I graduated, they had an offer to join them in Australia. I chose a different path, but it was a great opportunity to really get my arms around the analytics of working across industries, and again, looking at innovating and how to help company innovate for growth. So some of those seats came into play at the time. Anyways, fast forward to today, and I work backwards. I spent the bulk of my career within the asset management industry, north of 20 plus years, both as an executive working for Fidelity Investments, not only here in the Americas, but also in Europe and in Asia. And after leaving the company for personal reasons, I ended up founding my own advisory practice, advising entrepreneurs, venture capital funds, as they were trying to expand into different asset classes. And I ended up being an investor in consumer technology companies. It really came into me, this whole interest in getting into FinTech organically. Again, my curiosity around innovating and my background in finance, coupled with the exposure that I had around consumer technology, that I ended up finding myself looking at deals on the FinTech space. So that's what got me close to, and I was joking to Mark when I first met him, we now call it FinTech. It shouldn't be called FinTech. And I think when this crisis will ensue and we'll come back to the new normal, I think FinTech will no longer be called the exotic FinTech. It will be a mainstream discipline, if you will, within our industry. So I'm quite excited to join today's discussion. I think the topic is quite important for today, resiliency, and I'm looking forward to talking about that as well.
Thanks, Rafael. Great introduction. So folks, we have two incredible experts. Before we dive into this, just a couple other things. First off, we also have incredible students. And on that note, Salim, give us 30 seconds on you and what you're doing here.
Thanks, Mark. So hi, everyone. I'm Salim, a third-year student studying finance entrepreneurship with a minor of computer science here at Northeastern. So I first got interested in FinTech when I saw how the traditional financial industry was being revolutionized by technology, and how that really played a big role in financial inclusion. And my interest only grew further after joining Disrupt, the FinTech Initiative here at Northeastern, where I got to meet and learn from amazing students, professors, faculty, and professionals in the industry. And I really got to expand my knowledge on FinTech and really understand how big the future is for it. Back to you, Mark.
Thank you, Salim. That's wonderful. Folks who are looking for great talent, keep your eye on this young man, please. So moving forward, I'm going to give you just a quick overview of what we're doing at Northeastern, and then we're going to dive into questions. So Emory and Dean Raj asked me probably a couple years ago to try to improve what we're doing in FinTech at Northeastern. It's been an exciting journey. I'd say it involves kind of three major areas. The first is curricular, and I'm pleased to tell everyone that we recently started a minor within the finance department, a concentration, excuse me, I got to use the right term, in the finance department on FinTech. We have courses we're still developing. We're going to do better as we move forward, but this is a really exciting new twist. In addition, I have a new FinTech course that's out there. We've got some other pretty exciting courses that Deniz is going to be teaching. So we've got some great stuff on a curricular basis. And then from an extracurricular basis, you've heard Salim talk about Disrupt, the FinTech Initiative. We have an incredibly active student group, and they've done amazing things. I want to shout out to Megan Richmond here, who is the advisor to Disrupt and has done a fantastic job with the students. Thank you, Megan. These students have so much passion and energy for this topic. It's been wonderful. And then finally, I want to say hi to Doug Lowenstein, who's also in this call. Doug is recently started and is looking at other educational opportunities in FinTech, and more on that soon, but he's made incredible progress in just a very short period of time. So a lot happening in FinTech, all of it around a community. So it's great for us to get some of our community together, and what we will do before we finish today is invite anyone who would like to be part of that community. through the survey that you're going to get at the end to reach out to us. And we're happy to have you. The more, the better. This has been going great. So with that, we're going to dive into questions. And we're going to start kind of pre-COVID, pre-crisis, just to get our feet on the ground. But you know, if I have to jump to the end, I'll say, I think the theme of today will be out of crisis comes opportunities in fintech, and so that's where we're going. But to get there, let's start. Rafael, I'm going to start with you. Can you just describe pre-crisis a fintech project or startup you're working on, and how and what what was significant about it?
Yes, thank you, Mark. So a couple of things. Some backdrop before I get into the project that I have been involved. As Deniz mentioned, technology is at the core of enabling all this transformation that we have been witnessing, and I think is without a doubt the pace of change is what is disrupting a great deal of industries. And if you look at the, just to put some numbers into these, if you go back to 2009, you look at the amount of capital that both private equity and venture capital had as dry powder, if you will, meaning capital that is ready to be deployed, at the time was north of $670+ billion. If you look at the end of last year, meaning how we started this year, that amount was north of $1.5 trillion. Okay, I say this is because on the backdrop of where we were before the pandemic, financially speaking, and in terms of financing deals for both fintech and any company that is in the space, there was a lot of capital. So I am an independent board advisor to one of the first venture capital platforms in Latin America. It's called Polymath Ventures. It's based out of Bogota. And the thesis that we have in the fund is no different to what we have been discussing here. But one of the things that I particularly, and the founder of Polymath, Wendy Kai, has been very focused on, especially when you look at emerging economies, like in Latin America, for example, is something that Deniz mentioned, and it has to do with inclusion. We cannot grow without including different cohorts into the economy. And so one of the companies that we have in the portfolio, the one that I have been involved since inception, is a company called Aflore. Aflore, at its heart, what it's doing is leveraging all the digital tools that are available in the marketplace, whatever those are, we're totally agnostic. And we're trying to use that as a means to enable the underbanked community in the region. So if you think about the underbanked community in the region, we're talking about 220 million people that are totally underbanked. These are folks that do not trust banks. These are folks that ordinarily would not necessarily have accounts at the banks, but they are actually the driving force of the informal economy that contributes economically and socially to the fiber of a lot of activity in the continent. So what we did through design center methodology, human center methodology, we basically came up with a business model that uses this technology, social media power, to be able to empower what we call the consejeras, which are these very entrepreneurial women, by the way, in the region, to create loan opportunities to become the power of lending to these cohorts. And we have now 19,000 advisors working actively through the platform. And we have a lending book of around $3 billion to these cohorts. And this is only in Colombia, by the way.
Fantastic, Rafael. Thank you. Great example. Deniz. Deniz, hold on, you're on mute.
I'm working with a number of startups that were more on the financial services before COVID, but what happened is as COVID-19 happened, what I saw across all of the startups is they have very quickly pivoted into a crisis mode. And when I say crisis mode, how can we help in the crisis? They were able to turn around in matter of days to help different communities. And when I say that, it's at a speed that a traditional financial services company would not be able to even get to. So that is now leading into partnerships. And so in the last maybe 3 to 4 weeks, what we have seen is very close alignment, very close partnerships with existing financial services and the startups. To give a couple of examples, with the loans, PPP loans for payment, for payroll protection, we have a number of startups specifically partnering with small to medium banks in automating their loan onboarding as well as decision-making processes. Another thing that I have seen, which was very impressive, is one of the technologies that the startups is using is, as I mentioned, I am very focused on transparency and AI. This one company called Stratify, they specifically look at when the past cannot help you for the future, which is perfectly fitting into this situation where there has been such an anomaly, such a change that our AI is going to, traditional machine learning and AI is going to have issues down the road. Well, actually, very shortly, because the customer behavior has changed. But what they have done is they have created a crisis model and working with lenders, they're coming up with a way of not leaving anyone behind in the lending process, because after this, after COVID, we expect a very significant credit crisis, and individuals that were on the kind of the underserved, underbanked, or on the fringes will not be eligible for a lot of the credit and loans. So this company is actually giving the lenders an opportunity to look beyond the anomaly and move towards a more inclusive financial recovery. Again, the common theme is very quick response and very impressive partnerships.
Thanks, Deniz. Before I move on, I'm going to stick with you and just talk briefly about this topic of transparency and AI. So AI is artificial intelligence, right? And artificial intelligence creates lots of opportunities in financial services. It also creates problems. And so that's why you're doing this. Can you just talk a little bit more about, even pre-COVID, why it's important to have transparency in AI and what happens if you don't?
Happy to. So pre-COVID, when you are making, one of the things about artificial intelligence, and artificial intelligence includes many technologies, natural language processing, it's machine learning, but we'll take it as very simple, where we look at past information, past data, and then make decisions for our future. And it does it at a very large scale. And when you look at our data, we're looking at historical data, which means that if you look at financial data, even 10 years before, to train your decisions for future, the decision-making demographics was different. 10 years from now, and I'm not even talking about COVID, 10 years from now, women are going to be in financial decision-making roles. They will own majority of the financial decisions, which leads to a situation where the past decisions will not be really indicative of the future. So we really have to have a way of looking at our how we made the decisions, what bias we have in our data, and have the ability to modify so that we can adjust for the future decision making. Did I explain it well, Mark?
Perfect. Yes, you're the expert. I'm just hanging in here. So that was lovely. Thank you. So I'm going to go to Rafael in just a second. Somewhere around 10 minutes from now, I'm going to open things up to questions from the audience. So I encourage you through the chat box to get some questions to Salim. And I also encourage you to turn your videos on, just because I'd love to see more of you. So Rafael, more broadly, kind of how has COVID impacted your work in FinTech?
Yes, this is the now. This is where we're at. So the analogy is the following: we were going in a race. We were going pretty fast in this race, and the race is defined as the adoption of digitally enabled models, digitally enabled services, digitally enabled products. And it is fair to say that the adoption rate was actually increasing rather than decreasing, so without paying attention to the absolute. When the pandemic began to be taken more seriously, especially in this part of the world, things came to a halt very, very quickly. And so we have, and I have been basically putting fires down along with my partners, working with portfolio companies, leaders, to do two things. One is to make sure that they have the resources that they need to survive, broadly speaking. And secondly, and most importantly, really revalidating their business models. Because one thing is for sure, we basically made across the board a conclusion that once we actually come back from this crisis, they will be a true new normal. We don't know, it's only speculation what that new normal will be, because we're still trying to figure that out as we speak, but it is clear that the new normal will be with us for the foreseeable future. And in most cases, the new normal will be the new normal. So, and on the second aspect of what the majority of my time has been devoted on is really doing scenario planning around business model. And so three things have come out of that exercise. One is we know for a fact that some of those companies will not make it. So we've been having very tough conversations with the leadership to basically say, we're not going to continue to fund this operation. It is very likely that the people that are going to be involved in this company, they will no longer be in the company. And three, what is it that we can actually do to either sell on a short sale, look for someone to strategically partner with, or basically close. The second piece that we're actually doing, similar to this one, is what is it that we should be doing differently to accelerate the pace of the business model. And in this case, we've been having conversations with clients who actually are strategic potential buyers to basically say, we actually are running on a very tight budget. Are there ways that we can actually partner? And we're even exploring revenue sharing opportunities that they were not even included in the model when we first launched business. And then the last category are the companies that are actually doing very well. The conversation there is more around, given the spike in growth that we have seen, given where they are, what resiliency models do we need to put in place to absorb 300% growth, Mark, 500% growth, where all of a sudden some of these companies are hiring from the regular hiring that we used to have 2, 3, 10 people, they're actually going to 300 people, 500 people. So that's how I've been spending the time But one thing is for sure, it will be a new normal. And as I said before, with regards to the dry powder, the investors are in two categories. There's some that are actually saying, this may be an opportunistic time, but the others that are basically putting the money just to the portfolio companies to make sure that they have what they need.
Thanks, Rafael. Great points. Deniz, Rafael talked about a new normal. There's been a lot of talk about a new normal. Can you give your perspective on how FinTech is going to contribute to what that new normal is?
Sure. I think I agree with Rafael. It's everybody is talking about a new normal, but the new normal will be very different than what we have seen. And as Rafael mentioned, the speed in which I think with this situation, the speed of innovation has increased significantly. In some cases, certain technologies, certain emerging technologies have actually have been moved up 10 years. In a recent article about 2 weeks ago, there was a Forbes article that said that in month of May, 70 FinTech adoption, FinTech application use and FinTech adoption was 72%, which is a very high spike to what we have seen before. The new normal is highly digital, which means that our financial technology, FinTech world is the core of it. And one of the things that Rafael said at the beginning was our new normal, FinTech will not be called FinTech because it's just pretty much the baseline. Definitely, FinTech has now become a horizontal across industries. It used to be on its own. Now it's just the baseline. One of the other things that I have seen and see it very often in such a speed that we no longer have very specific verticals. It used to be you had health tech, you had FinTech, you had insurtech. You're seeing all of this merging because it's anytime economy and life meets, and there's a lot of touch points. So that's merging is happening. What I think the role of FinTech in the new normal is that it's the foundation. It's what's going to get us to adjust our financial services for a more inclusive, safer recovery. It's how we're going to be changing the way we service economy. So it's just the baseline. And it's even more important than before because of the speed in which things are changing.
Great comments. Rafael, anything you want to add to Deniz before we move on a little bit there?
Yeah, absolutely. I think if you think about the response of the FinTech sector, look at capital markets, for example. The FinTech companies that are actually servicing the capital markets more efficiently are the ones that are in the FinTech space, not the established players. Deniz talked about the healthcare sector. If you look at how this very massive stimulus package on the back of COVID-19 by the government, in this case, the US government, we're talking about $300, $500 billion of flows of money. Well, guess what? Chime, for example, which is a virtual digitally enabled bank, this is the first and only institution that made available to have funds available from clients who are already clients of Chime. They were advancing the flows that they were going to get from clients from the massive fiscal program that the government put in place. Venmo, that is the company that is in the business of transferring money they were able to create routing and account numbers in their software so that it accounted for those who do not have banking accounts. If you look at Cabbage, which is another fintech company, announcing to actually increase the payroll by 30,000 people on the back of the PPP program, the increase of loans backed by this program. So the response from the fintech sector gives you a sense of how resilient, how agile, how prepared the sector is, simply because this is their natural environment. What is happening right now, where social distancing is the norm, well, if you don't have a digital model in place, tested, you're out of game.
Great answers. So one of the things, folks, that I hear from both of them is real opportunity and real passion here. And so we have a few questions coming in. I'm going to ask our guests one more question and then open it up to some of the questions we have. If you have more, please feel free to submit them. Deniz, so how does this opportunity for FinTech create opportunities for us as individuals and as a community?
Very, very good question, Mark. So with all these opportunities that's coming, I think it's a chance for us to recalibrate our business models, our in switching where the focus is, and that's what we have seen with this startups. But now, as Rafael said right before, there's significant services that's being provided by FinTech, and most of them need great skill set. And I believe that we have a community here that could definitely be able to support that need. They need expertise. Some of the things that I recently I was recently talking to Devin Sherman from Mass Challenge on an event, and listing all the startups that are really focused on changing, moving us to the new normal. A lot of them are really looking for the right skill set, strong community, and this is where we can play a big role.
Absolutely, completely agree. Rafael.
Well, I have 3 children, teenagers. My little one will be going to college in the fall. And know that I'm doing a plug here, but I am totally biased. But one of the things that I keep telling them for some time now is we are living, when 10 years from now, we're going to look back and we're going to see that this time was a huge milestone, a huge moment of transformation. We are converting into a whole new system. If I am, as young as a lot of folks that are in the call, I want to be part of this. I want to be part of this moment. Whether you are joining a startup, whether you're joining a fund that is deploying capital to disruption, whether you're joining a corporation that is actually welcoming and is looking for that talent that Deniz talked about, because they need to find ways to innovate because the new, you want to be part of this. So I'm asking you guys to consider, if you're not in the space, to really consider it and find ways to get involved. If you're not there yet, again, the folks that are in this call, this is the environment that you should nurture and leverage for you to be able to get the skills that you need to be part of it.
Great answers. I'm just going to add to that, because I want to move to audience questions, that I think the skill set that needs to be acquired is quite varied. And people always think about coding as the first thing you need, and that is important, but it's not the only thing. And analytics is really important, but not the only thing. A lot of it is around understanding business, understanding financial services, right? And our guests are nodding their head. Let's get into that, but I'd like to open up to questions because I know we have some. So Salim, can you give us a question?
Yes, so a question with a similar topic you're talking about now. Kerry is asking, in a particular sense, how can finance professional positions ourselves to best fit in this fintech world? It seems like all, if not most of the hiring will be in the CS or engineering area.
I will take a stab at answering this. One of the things when you're working with, as I mentioned, it's mostly with, I work with startups, and the information that the expertise they need is on what Mark said, financial services understanding is really important. Technology alone is not going to solve the business problem if you don't understand the business problem. So having a good understanding of the business is still a very, very valid skill set, and is really valued in the startups ecosystem. At the same time, some of the financial, depending on what role that you're playing, some familiarity with technologies that you use is good, but you don't need a computer science degree or analytics. These are important, but they are not, as Mark said, the thing that actually is core.
Rafael, great. I completely agree. Rafael.
Yeah, I would also add the following. Two things: be flexible with yourself. Okay. If you have an interest in joining a startup, if you have an interest in joining, let's say, a fund that deploys capital into early stage entrepreneurs, allow yourself flexibility, because what you're trying to do is almost like when you're training for a race. You need the training. You need to train the muscle. You need to create that muscle capacity. And so, although you have great training from university, and you will continue to get opportunities like this one to get, training, there's no replacement that actually on-the-job training. So throw yourself into an environment that will allow you to grow and learn. If you know for a fact that you're not a coder, if you know for a fact that you're not in the design piece of the equation, try to choose the companies that have areas of interest to you, and allow yourself to, plunge yourself into the learning opportunity.
Excellent. Salim, another question?
Yes. Anne asks, what advice would you give to someone looking to start a career or a venture in a fintech space in this time?
Rafael, do you want to start? I started last time.
Yeah, I'm happy, Deniz. I would echo what I said before. I mean, everyone in this call would agree, life is not linear. Okay, you're gonna have situations where you need to pivot. So if your interest again is to really get yourself your hands dirty into what we're talking about, allow yourself some flexibility. So throw yourself into a startup if you have the ability to do that. Throw yourself into a large company that is trying to innovate. So be the innovator, the incubator from within. But allow yourself some flexibility. There's no, I mean, if someone tells you, any successful individual would confirm the following. Their success is not dictated by the perfect choices that they made at the beginning. On the total contrary, what you're doing is you're failing miserably time and time again, because it's by failure that you're learning. I know this may sound counterintuitive.
100% agree. And there's not much I can add to what Rafael said, but it's if I had to say, have a passion, have a purpose, and that purpose will take you to the, in my case, my purpose is I want to really solve the transparency and bias issue and have an inclusive financial services. This is driving me to take certain risks that maybe it would not be always advisable, but it is what fintech is. It's an evolution. It's the next step of the financial services. Fintech does not mean, to Rafael's point, you're going to be in a startup. You could be in an innovative, in a company that's investing innovation. There, you could be in an accelerator. There's so many ways to get involved. It just starts with wanting to get involved.
Lovely answers. Salim, we have more questions.
Yep, we do. So this question is, what other companies in particular are doing particularly well in this crisis, either because they pivoted or because of their existing business model?
I'll take a stab. The existing business model, everybody knows Zoom now. But the other thing that on the existing is payments. Payments industry, cashless payments, digital payments. This is the area where there's a lot of traction. And not only that, but blockchain has, adoption of blockchain has actually moved up at least by 10 years. So that's really the existing model. The ones that pivoted, and I have one specific example. One of the technologies, AI technologies, methods that's used for credit risk analysis is actually looking very viable for diagnostic analysis of the COVID patients, for predicting patients, prior to showing symptoms. So this is a very intriguing switch from financial services to healthcare, but using the exact same technology. Rafael, want to add anything?
Yeah, I would like to highlight a company that is in the business of running what we call now, I think the name will change, virtual conferences. So the company is called Open Exchange. You can look it up, and it's a company that, as I said, they work predominantly with, let's say, publicly traded companies. When companies do roadshows and then do investor calls, previous to COVID-19, they had a very nice business that it was growing. And again, fundamentally speaking, if we believe the secular trends around digital connecting, I mean, they really built a pretty robust and nice business. Last year, they had 3,400 what they call events, meaning, again, virtually, totally well protected. It's a different version of what we're doing because you have very important information. So there's a lot of security built in the architecture. When COVID-19 really took off in earnest, the business that Open Exchange has, as of now, this is as of last week, we had a conference call with the CEO. They have now in backlog, revenue in backlog, 19,500 events. Again, I go back, they had last year 3,400 events. In backlog, they have 19,500. We're not even halfway through the year. Why? It's because companies are already, and again, talking about the new normal, all their clients are basically saying, this is the new normal. We don't know if we can actually do roadshows on an ongoing basis, but we have to report. And more importantly, if you're actually wanting to have a more engaged way to, talk to your investors or your LPs, this is a way to do it. So what I mentioned before, the CEO, when we had the conference call with him last week, one of the points that he was making was he's now very, very focused on making sure that the infrastructure is resilient enough to withstand the astronomical growth that he's experiencing.
Great answers. I love them. So we're going to have time for one more question. Before we do that, I'm going to be selfish for a second and do just a few things. I want to shout out to a few people in the audience. The first of those is Gary Dunton. Hello, my friend Gary Dunton. Gary, thank you for all you do for us, and your expertise and your support is extremely important. Thank you, my friend. So I also want to recognize Mohammed Benis, who is on mute because it is the end of Ramadan and he's hungry. But Mohammed is the incoming president of Disrupt, and we love having you on. And then I think 9 former students of mine. I love having you here. Brian, Pia, Spencer, Mahitha, Sanjana, Pippa, Zainab, Valabi, Ganeet. Thank you for participating today. It's great to have you in our community. So Salim, one more question.
Sure. So this question is from Austin. It's with regards to fintech adoption. What are the biggest barriers in getting companies and the public to accept these innovations and implement them?
You want to take it, Deniz? And I'll follow?
Sure. So prior to COVID-19, the biggest hurdle in getting a large firm, an incumbent partnered with the innovative startup was around regulations and in some cases how to put the innovation actually into production and have and not have any interoperability issues. There was an issue of trust. So both the regulation and trust, and then interoperability. So those were the 3 major things. After COVID-19, in a situation where human behavior was forced to change, we see a lot more willing to jump and embrace the new innovations. We saw that in the digital banking space. Now everybody's pretty much only using digital banking. The other thing was on the, as I mentioned before, in the blockchain. We've seen it in the payments. I think this is going to speed in how fast we're adopting, but I am very hopeful based on all the things we have seen. A lot of the small to medium banks have partnered, even the ones that were very worried about innovation have now partnered with startups. Rafael, do you want to add?
Yes, thank you. So as Deniz mentioned, the fintech space is already doing mission critical workflows. Online payments is one of them. Fraud and authentication solutions is another one. Trading infrastructure is another one. So those are the ones that are really mission critical. The adoption for those that are not mission critical, banking is a very interesting one. I don't think there is any CEO of any bank that is concerned around their business model and their future. None. I think it's clear, and if they're not, and if they're publicly quoted, I am sure they're getting hammered by investors to basically say, what is it that you're doing to accelerate the adoption of digitally enabled technology in your models? Because you have very small banks that are fully digital that are eating your lunch. The fact that you have Chime doing what I already told you that they're doing, the fact that you have a lot of all these players they're actually acting way fast. Banks, even to this day, Bank of America talks about, how quickly they're reacting. They're not reacting quickly, okay? They're lagging relative to the fintech. So the adoption rate, I think, as Deniz mentioned, I think it's fair to say that we're both assuming that it's going to increase. I'm quite optimistic of the future, as we discussed, and it's exciting times. It's very, it's volatile, and we don't know much about what's going to be this new normal, but it's exciting times for the transformation that we're going to see very soon.
Thank you both. So we've got about a minute left. As we close, I first want to say thank you to Debbie, Abigail, Liza, and Ann for setting this up. This has been a fascinating session. I've really enjoyed listening to our guests. I also, again, want to thank Emory for his support of this. So this is a hard time, right? We're all sitting at home right now. We've painted a rosy picture. We've talked about things like finding purpose and being resilient and rising above. 30 seconds each, Deniz and Rafael, some closing comments of some optimism as we struggle through this and get to a better future.
I think I started with having a purpose. The purpose is what keeps you, it's challenging times right now with the, we are experiencing something that we don't have a reference point to manage for. So having a purpose, focusing on the positive changes that's going to come out of a challenging crisis, and is how you're going to keep resilient in this change. One of the things that anytime there's a major crisis, it bore very positive, innovative future. So I am very hopeful and very positive that this is also going to be a very innovative few years following this current situation. And I wish everyone health and safe road ahead.
Lovely. Rafael, last comment.
Marcus Aurelius used to say, worry about what you can control and act accordingly. We can't control the pandemic, but what we can control is our ability to respond to whatever challenge is in front of us. So it is easier said than done, but that is something that I would definitely encourage us to think about.
And on that wisdom, I invite you all to join us in what we're doing at Northeastern on FinTech. And I would love you to all just unmute yourselves and give a little round of applause to these two amazing speakers. Great work today.
Thank you.
Have a great day.
Thank you, guys.
Thank you.
Thank you.